Okay, so NFP came out yesterday and it was dovish, all right? It it kind of has unwinded um the hawkish feel that the Fed was having with respect to growth and then jobs. Okay. So I have written an article on it, written a blog post on it. Just go to www.sogcap.com, go sign up, get your account, and get access to the blog. It's free. Getting access to the blog is completely free. Go read, it's just a 9 minute read. Very, 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 it helps you understand exactly what is happening with respect to the job numbers that came out for July 2026. So July jobs report it broke one of the narratives that the dollar bulls had left to lean on. Okay, non-farm payrolls, it didn't just miss, it went negative. All right, I've done like a detailed breakdown and I've made it in plain language, so it's very, very easy for you to understand, even as a beginner trader who wants to add fundamentals to their technical narrative. Yeah, so the jobs added minus 23,000, versus a forecast of 83,000. That's like an outright loss. The market was expecting 83,000 jobs to be added. What came out was negative 23,000 jobs actually taken out of the US economy. Yep, there was a revision of the May jobs numbers that came out 63,000, down from 129K. um, June revision 20,000, down from 57K. A combined revision of negative 103,000. This is like the largest so far of the cycle. Unemployment rate went down from 4.1%, went down to 4.1% from 4.2%. So someone will be confused and ask, if unemployment is going down, why are jobs, why is the job market not looking great? We'll get to that. Labor participation down from 61.5%, down currently at 61.4%. The wage growth was 0.1%, but was below the forecast of 0.3%, and that's a month on month. And the wage growth year over year was 3.2%, down from 3.5%. So the difference between the July report and the June report is that, unlike the June report, which had a jobs miss but had an accelerating wage growth, for the June report, it missed on the jobs that were added as well. But the wage acceleration was headed higher. So the wage acceleration kind of um watered down the job miss, issue. But for the July report, the issue with the July report is there's been a job miss and wages are also decelerating, which means the issue for um inflation going higher with respect to accelerating wages is also going down. So it's going to put the Fed, on a level where they wouldn't, outright want to hike, because now from the jobs perspective, the reason for them to hike is also going down. Job market not doing so well, and the wages that was supposed to be the pump into inflation is also decelerating. You understand? Yeah. So go read, go read. You will understand basically what is happening. It's in plain language, so it's not really difficult for you to get it. Yeah. So right after this NFP, the DXY buyer score flipped from bullish to bearish following this release. That is the DXY buyer score for SOG Capital, because we track the dollar. We don't just read we don't just track the data. We score it into a DXY buyer score. So it gives us an understanding as to, from the macro perspective, what is happening from a macro perspective, what is happening, the score, whether the dollar is bearish or bullish, from a macro perspective. And currently, as we speak now, right after this NFP release, the dollar index flipped bearish on our macro and fundamental read. Okay, so it's at a -1 at the moment. When you get access to the macro tracker, you can easily see the breakdown over there. Yeah, so from a macro and fundamental perspective, our DXY is now scoring bearish, which means dovish. Okay. Now, the one thing that is still keeping, there are a couple of factors that is still keeping the dollar index, from clearly sweeping bearish across all boards is geopolitical risk. All right. The issue with the US-Iran war, there's still not been a settlement. They've still not agreed to open the Strait of Hormuz, which clearly is an inflationary risk on the side of the dollar. Yes, so that is the reason why the DXY has not clearly swept bearish across board. When I'm done, I'll switch to the SOG Capital Macro Tracker for you to see the DXY buyer score. Yep. So basically that is it. Go read. I will say this: if you don't like reading some of these things, the breakdowns and all of that, how are you even trading? You are trading basically just off technical analysis, and that is really, really risky. You get it? You have to learn how to understand how to pair the fundamental with the technical. You have to learn how to see the fundamental play out on the technical. That is when you become an unstoppable CFD trader. Yep. So I put my final thoughts here. Yeah, this is the first report of the cycle where the labor market and the wage data agreed with each other, both pointing the same dovish direction with no offsetting signal to muddy the read. That's exactly why it was enough to flip the XY buyer score for the first time. But with oil still elevated and COT positioning stretched the wrong way, this is not the moment to assume dollar story is settled. One of the most important factors that we are data that we are waiting for is the August 12th CPI. Yes, that will be this particular week, coming week. It's going to answer a lot. It's going to give us a clear direction as to whether the dollar is outrightly flipping bearish, and we're about to see, a bearish trend on the DXY for the remaining months of the year. All right, so I'm going to switch to the macro tracker. So you see the read over there. I have it already opened here. Oh, man. I had it already opened here. Still loading. I don't know if it's. Let's see. Yeah, I think you guys can see. I need to switch something up. Come on, I need to switch something up. To switch to the pro. All right. Okay, so um there we go. There we go. There's a dollar index macro bias at the moment, bearish DXY, just after the NFP data that came out. Okay, so you can see the indicators, or yes, so let's say the indicators, the data that we are tracking, number of things we track. The Fed policy stance currently on hold, so it's neutral. Fed dots plot, and that's for we are waiting for the September meeting. So currently the Fed dot plot is not scoring, so it's neutral. But the labor market job mix dovish pressure. You can see the inflation outlook per the previous one, cooling, so it's negative, PPI negative, CME, 40% high probability, more than 30%, so it's +1 positive. COT speculation, dollar index, they are Traders are bullish on on the dollar. Net non-commercial positioning plus 22,489 contracts. This particular current week is currently updated. The weekly change is plus 5302. So for the DXY, large speculators are firmly net long. Okay, at the moment, geopolitical risk escalating hawkish for DXY. Yeah, so you can see it's not clearly a bearish sweep across board, but it's still bearish because currently the score is -1 at the moment. Yeah, score is -1 at the moment. So yes, that is the DXY fundamental macro bias. And so from a fundamental macro perspective, as of now, we are bearish on the DXY. The technical, however, is not outrightly saying the exact same thing at the moment. But the technical on the weekly is saying it's kind of lined up with the DXY. But the problem is the DXY technical, you know, and the euro dollar and the GBP USD technical are not saying the same thing. DXY and euro dollar at the moment are lined up on the weekly time frame. DXY weekly is bearish. Euro dollar weekly is bullish, but the GBP USD weekly is not yet bullish. So that is the reason why I'm saying the DXY technical direction is not really giving me the energy that I kind of need to go ahead and short the dollar index, extensively. Yes, but from the macro perspective, DXY is bearish. Next week, God willing, CPI will really come and give us the confirmation we need to go ahead and either short the dollar or wait for a technical realignment to start buying the DXY. Because if CPI comes in hot than expected and PPI also comes in on Thursday, that one also comes in, hotter than expected, the DXY bearish bias could quickly reverse. Yes, could quickly reverse, and that would put pressure on the Fed going into the FOMC meeting for September, God willing. Yes, so that is it. Currently, DXY bias is bearish. Yes. So for anything, if from a macro fundamental perspective alone, I would want to sell the dollar. But like I said, the dollar index and the macro fundamental alone is not um does not give you the outright, you know, entry. You have to go pair it with the technical. You have to understand whether the macro direction is lined up with the technical. And like I always say, the macro direction should always line up with the weekly time frame direction of the DXY. So if the macro is bullish, we expect the weekly time frame direction of the DXY to be bullish. If the weekly technical is going against the macro, two things are involved. We will either stick with the technical because it will eventually flip to the macro direction, or the macro will catch up with the technical. You get it? Yes. So the two of them is a balance. You have to learn how to pair the two together, not outrightly stick so to one, because the macro will give you the reason why, the technical will give you when to execute. You understand? So as a fair idea of the two is what makes you an outrightly excellent trader. So yes, currently DXY bias is bearish. And like I said, go and read the article we've written. You'll get a clear understanding of it. We will be posting other blogs going forward. We will be dropping other blogs going forward, especially a technical read that I should be updating the blog with it, the technical direction read. I would be dropping that on the blog so you can go read and understand clearly what is happening from a technical perspective, going forward on the DXY and what we should be looking at going forward next week, God willing, as we await CPI. Safe. Bye-bye.